Emanuel, I'm really happy that you will be part of the Czech Investment Conference, that you will have a presentation there. But before we kick off the interview, can you briefly introduce yourself?
Well, thank you for the opportunity. I'm excited to join the conference. Sure, about myself, from New York, born and raised, and I really started off my career journey at Morgan Stanley, where I was an investment banker, really cut my teeth, learning mergers and acquisitions. That's where I learned finance and accounting skills. And from there, I wanted to go and get some strategy experiences at a corporation, and I was lucky enough to work at the National Football League, which is a very big media company in the United States, not just a sports league. And that's where I worked with franchise owners and the commissioner on different league initiatives, including the media deals that we have. So I had these experiences both in the finance field and in the strategy field, and wanted really to marry them together. So I decided to go to business school, and I went to Harvard, and that really helped me form where I wanted to take my career. And I realized as an investor, you can really marry the two experiences that I had, put on those hats, and deploy capital effectively. So upon graduating Harvard Business School, I worked at several multi-billion-dollar hedge funds, including Sandler Capital and Hutchin Hill Capital. And at those funds, we deployed a strategy of fundamental long-short equity, where we looked for opportunities throughout the world on the public markets. And it was very research-based driven. What we tried to do was find underappreciated companies and take big position sizes based on our research that we did. And I did that for about a decade after business school. And at that point, I felt like I had enough experience, and I wanted to try my own. My entrepreneurial spirits were really getting the best of me, and I wanted to kind of create my own fund. So that's when I started a fund with two senior partners, and we really focused. We narrowed our investment approach, if you will. So we really honed in on merger arbitrage and special situations across the capital structure. And I did that for about several years. Our results were very stellar. We did very well for our investors, but we couldn't scale it to where we wanted to go. And about 2019, 5 years ago, I joined a family office called Emless Advisors, where I had an opportunity to run our investments both in the public markets and in the private market, specifically on the venture side. So for me, it was a very good opportunity to take, where there's permanent capital, and we had dexterity to invest throughout the world. So that's where I am now, and very happy and content to be there.
You mentioned that you went to Business Harvard School.
Yeah.
And do you think it's essential to hold an MBA from Harvard to be successful in the investment world?
I don't think you can go wrong with a Harvard Business School degree, but I don't think it's necessarily essential. There's many ways to skin the cat in the investment world. So I think for some people that have different experiences, whether it be at the different investment banks or private equity, I think, or if they're very avid about the market and been investing in it from an early age, I see, there's not barriers to entry into this field. You just have to be passionate, put in the hard work. For me, Harvard Business School is very important. I needed that maturation process. My professors really showed me different opportunities career-wise, whether it be in management, consulting, banking, and I just appreciate marketing as well. And I appreciate it as an investor. You kind of combine all these different skill sets, those ones that I mentioned, and you put them under one umbrella. And it's exhilarating for me to be able to do that. And had I not gone to Harvard, had I not been exposed to those professors and those peers, I'm not sure if I would be sitting in this seat right now. So it was essential for me. And it's a great brand, and it certainly opens up doors. And there's a lot of help with alumni worldwide.
Can you briefly describe your investment strategy?
Sure.
I'm always curious about investment strategies, so please explain yours as well.
Yeah, I would say when we are looking at an investment opportunity, we try to frame it as a mosaic, many different aspects that come into the mosaic. So we have a financial model, but it's based on all our assumptions. But the assumptions come in from very how we come up with our assumptions comes from many different sources. So for example, it's meetings with the management team. It's meetings with competitors to the stock that we're looking at their supplier base, talking to industry experts that we make relationships with, as well as just looking at general macro trends and being guided by how history has, taught us about those macro trends, whether it's interest rates, inflation, aggressive monetary policy or fiscal policy, and we combine them all together. We build a financial model, and we look at historical valuations. And something that I'm very thankful for that I'm able to incorporate is this background I now have in venture, because I'm able to see emerging technologies. So I can also add that little tool to the mosaic and see if there's any disruptive technologies that are coming, and are the companies we're contemplating either defensible or are they actually that technology? We form all those together and we look at it versus different investment opportunities that we have on hand, and we really try to keep it very concentrated. And we go where we have the highest conviction. So that's the mosaic. And what I tend to gravitate towards are companies that I say they're neglected by Wall Street, whether there's not a lot of sell-side analyst coverage, they've been left for dead, there's not a lot of investor excitement about it. We know there's some kind of change going on, whether it's a financial change or whether it's a management change or strategy change, and there's some catalyst to unlock that value. So catalyst, neglect, change is always a mantra of ours that we try to really hone in on and try to be differentiated.
Like Groupon?
Yeah, Groupon's a great example. Here you have a stock that's certainly historically been left for dead by the U.S. investor base, and the many different competitors, to them, and there was a question about how defensible was it, and the valuation at some point got pretty exaggerated, but that's a neglected company, and the change comes in with the new management team, right? That's coming in to shift the strategy, and the catalyst, if you will, is monetization of certain assets or investments that they have, as we talked about the strategy and the shift of how they can maybe pivot the company, and their different their marketing and sales and marketing approach. So, while we don't talk about investments that we're contemplating too much or we are invested in, it certainly fits the criteria. And when you have somebody who's extremely reputable in the world investor community, who's really not only is driving change, but also has put his own capital behind the company, it speaks volumes to us, right? And part of that mosaic is how much stock do the CEOs own? How much stock does the management team own, right? Put your money where your mouth is. If I'm going to put it, hopefully they are too. So, definitely is right down the alley of what we're looking at.
Did you have time to look into Groupon?
I've looked at Groupon in the past. It caught a little bit of buzz in the investor community in the U.S. And I believe it's, within the community that I traffic in, it's a name that I wouldn't say is too prominent, but something that we are all contemplating. Have I dug into the financials? No, I am aware of the different investments that they've made on the private side that they're looking to monetize. I do keep very close track of, how they're comping in terms of their sales, or what's the trajectory of that, and what's, how are sales trending on the internet for not just them, also for some of their peers and competitors. But that's the extent of what I've done so far. Yeah. Would love to meet with the management team. Would love to kind of learn more about the story firsthand. Haven't been successful in getting those meetings yet, but confident soon enough, hopefully. Did review the last quarter. Things, in my opinion, are right on track. And what happens is sometimes the street gets impatient, right? And the benefit of working at a family office when you have great peers and you have a great founder is we're thinking about the long term. So when the market presents us with opportunities where there's just the stock's a drawdown, if you will, the stock is just down for no reason other than algorithms are hitting Groupon because it falls into a specific factor, that's great for us because it allows us to buy a stock that we think is underappreciated and undervalued at even a bigger discount. And it's not reacting to anything fundamental driven. It's all on the macro side, which is noise to us. And that's something that I think is extremely critical as an investor, is to block out that noise, to not be too hung up on what the entire investment community is thinking. Kind of just be your own, just do your own research and not have to rely on the sell side, if you will, or your peers in the buy side. It's great to have peers on the buy side and kind of bounce ideas off of, but our mantra, one part of our mantra is never rely on other people's ideas. Do your own work, but it's okay to bounce ideas off of one another. It's great to get critical feedback, but don't invest just because one of your well-respected friends at another fund is investing.
Is there any specific sector or industry that you are looking into?
No, I mean, by way of background, I would say I'm very well versed in the industrial sector. So that includes machinery stocks, aerospace and defense, multi-industrial companies, rental equipment companies, HVAC. That's how I was raised in the business. When I was at Andor Capital, did a little bit of retail as well. But for the past 5 years, our philosophy is to be geographically unconstrained and industry agnostic. It's not great to be too myopic. There's a tremendous amount of opportunities worldwide, and they come at different discounts at different periods, and people underappreciate them in different certain sectors. So we try to go and try to navigate where those opportunities are. We don't want to be constrained too much. And then once we identify whether it's a company or a theme or a sector, then we get really deep. So I have a very good hold on the industrial complex. Technology is becoming something I'm getting better and better versed at, given my experience in venture, but I have ways to go.
When we met on Monday, you were very open to look for investment opportunities anywhere in the world. So what about China?
So China, open to it, but clearly right now I think China is facing a lot of headways, and the government is trying its best, but unable to get that economy going again. That's not the issue. The issue I think that we have in certain geographies is how restrictive is the government? Are they business friendly? Are they friendly to foreign investments? And I would say that hasn't necessarily been the case with China, certainly not over the past several years and coming out of COVID. And plus, in China, you see these cities that have been built and are empty. And it's a big issue. And they have a lot of mouths to feed, and the economy still isn't really going to where it needs to be in order to help the population. So we're open to it, but I would say reserved on it or cautious on it. When you have fake, I would call them fake cities going on, you don't know about, there could be companies that are not following accounting standards that we in the U.S. are accustomed to. So we tread very lightly there, and frankly, we haven't made any investments there over the past several years.
What about Czech Republic? Would you consider any investment in the Czech Republic?
Sure, I look very much open to it. The Czech Republic has undergone significant changes since.
Because this is not the first time, right?
No, it's not the first time I've been here. This is my second or third time I've been here. Thoroughly enjoy it. And even on this trip, got a chance to go and see some of the neighboring countries. And it's exciting what's going on, right, in Central Europe and Eastern Europe. They're very business friendly, very tech savvy, very tech forward. And in some ways, they are I wouldn't call it an emerging economy, I'd call it an inflecting economy. And they're not necessarily burdened by some of the pretenses that other developed countries are. And they're open to new approaches and new technologies and new scientific approaches in order to really help the growing population. So clearly there are some geopolitical considerations to take, but I see it as somewhere that's going to thrive. And again, we have a benefit. We have long-term capital and we have a longer-term horizon. So we're, as I think about it, here the Czech Republic is poised to have good growth over the next 5 to 10 years. Certainly a place that after this trip I'm going to focus my attention and see if I can find some hidden gems.
You focus on special situation investments.
Yeah.
Can you give me some examples?
Sure, I'll talk more broadly and then I'll try to incorporate a few examples. So a great example is where we think about a special situation would be, let's say it's a very fragmented industry, but perhaps there are 1 or 2 large players that are looking to do roll-ups, or the largest player is merging with the second biggest player, but that's not going to trigger antitrust risk, right? And then the street is underappreciating cost synergies and revenue synergies. So that's like an opportunity that we consider right down our alley. That was a great opportunity that I invested in. I mean, it is over a decade ago, but in the equipment rental space in the United States, United Rentals acquired one of its largest peers, RSC or RRR was a ticker, and now that stock just took off like a rocket ship, right? They were able to get pricing power, and they were able to acquire other smaller companies as well to form like the biggest equipment rental company in the U.S. Other examples could be companies that are breaking up, right? There's sometimes a conglomerate discount, and the sum of the parts is a lot more than what it is currently. And we've seen that in the multi-industrial space time and again. We saw with Tyco a long time ago, ITT a long time ago that split into 3 companies. Raytheon and United Technologies, that was not just a merger, but also there was a reverse Morris trust that occurred there. So we try to try to skate towards opportunities where there is some kind of change, and that's the special situation. It could even be as broad as a new management team coming in, right? Potentially, I'm not saying this is the case, but Boeing has undergone a significant amount of distress in the past couple of years, and they're bringing in new leadership. They're acquiring Spirit Aerosystems, and let's see, right? Could that be a special situation? I mean, that's on the very, very large cap side, not necessarily where we traffic in, but it's a company that's extremely out of favor, right? So that to me qualifies a little bit of special situations. And then of course there are the merger arb opportunities, and that's, I would say, very challenging right now, because especially under this administration, mergers are not, they're not being approved, and the length, the process to get approval is extremely elongated, right? So, those are just some examples of how we define special situations. It could also be a private equity is bringing a company public after owning it for a while. They need to sell down those shares over time, and that puts a real cap on where the stock could go, because there's a lot of supply of stock coming into the market. That could be of a lot of interest to us. And finally, if we think a company may be a target, right? Maybe an acquisition target, we'll navigate to those as well. So like most things, it is a mosaic, but it may be, just to highlight again, when company A may merge with company B and the synergies are underappreciated, a new management team comes into place, or they're just pivoting the entire business. Maybe they're going to a subscription-based revenue model, right? So those are some examples.
Sounds great. You will talk about it more at the Czech Investment Conference.
Sure.
Also, because you will have a speech on the stage, I was also curious, could you do a small mastermind group that you could meet like 15 investors?
Sure, if you tell me what the topic is, yeah.
Now, I'm sure that there will be plenty of people who would meet you in person and just talk about your experience and your investment ideas.
Yeah, sure. I'll come prepared with like a few investment ideas, so this way I could talk more about a few stocks, and like be a little bit more specific about it. I could probably get that's something I could probably get some approval for. Yeah.
Great. Thank you very much. It was a
you.
pleasure meeting you.
Pleasure as well. Thank you for the invitation. Thank you for your time.
And I look forward to seeing you in November.
Can't wait.
Thank you.